Hi everyone, let's cover my Elliott Wave analysis on Bitcoin, and in this video I will cover my main Elliott Wave scenario on the weekly time frame and have a look at the 4-hour time frame as well. So on the weekly time frame we're still looking for another all-time high. However, the move to the upside that we then expect is going to be the final leg of this bull market. It's your wave 5. After wave 5 the bear market begins. Wave 5 internally is a 5-wave structure. It will take a couple of weeks. We have more than enough time to then figure out the exact top of the bull market. Let's first have a look at wave 4 because I have 3 main areas of support for this wave 4, and preferably this wave 4 is going to create its low and start wave 5 on one of these areas of support. Now these are range point of controls that come from a volume profile. Now the volume profile is taken from the 8th of July to the start of this range to get the point of control at 107.7k, which is touched. If you extend it a little bit further to the 9th of May, you can see you get the point of control at 105k. And if you extend it even further to November 2024, you get the point of control at 96.5k. Now then we go to the 4-hour time frame. And I like to keep things incredibly easy. In general, if you're in a trending market and price creates a high and the move to the downside is a higher probability corrective structure, you're looking for continuation to the upside. That is your directional bias, unrelated to the exact corrective structure that you're looking for. However, what's generally easiest for people is to figure out if a move is motive. Is it an impulse? Is it a diagonal? Or is it a multi-1-2? So I shortly want to cover these 3 because if there is a potential for this move to the downside to be a high probability impulse, diagonal or multi-1-2, you have to be aware of possibly much lower prices to come, like basically the end of the bull market. So can this be an impulse here? No. 1, 2, 3, 4, 5, lots of overlap, not allowed in an impulse. Can this be a diagonal? No. Wave 2 is counted as a high probability flat, not allowed in a diagonal. This then leaves a multi-1-2. But also, as explained in previous content, doesn't have high probabilities. If you look at a double 1-2, 1-2, 1-2, 3 down, you need a diagonal in the second wave 1, low probabilities. And if you end the second wave 1 here, then all of this has to be wave 2, which is much longer in time compared to the highest degree wave 2, lowest probabilities. If you're looking at a triple 1-2, 1-2, 1-2, 1-2, and then a wave 3 down, then the final wave 2 touched the 886, lowest probabilities for a wave 2. And also your lowest degree wave 2 is bigger in time, larger in time than your highest degree wave 2. So in other words, we cannot count a high probability motive wave structure to the downside here, impulse, diagonal, multi-1-2, increasing the probabilities that whatever is going on here is a corrective structure. This by itself, without doing any other form of analysis, increases the probabilities from an Elliott wave point of view to look for upside. Your directional bias is taking out the high. Sure, you can get another move down, take the lows, etc. Your bias is that whatever is forming here is corrective. You're looking for price to move up. This will only change if the multi-1-2 plays out. You get a large wave 3, and then you also get a triple wave 4 and wave 5. If this plays out, we get a larger impulse, multi-1-2 over here. You get your 3, you get your 4, 5s. Then you expect a larger bounce to the upside, which has to be a corrective structure. And then you look for another move towards the downside to much lower prices. As long as this is not on the chart and is not printed, probabilities are lower for any motive wave structure, higher for any corrective structure. Which makes it interesting for longs, because if price is moving into higher time frame and very important areas of support, the longs are preferred, and potentially that could be an end of a wave 4. You look for continuation to the upside. Of course, you have to manage it correctly. But now let's have a look at the corrective structures. So it's a little bit, it's more detailed. We go a bit in the nitty gritty, so to speak, but the conclusion is the same. We're looking for corrective structures and more upside. Now this on my chart here is an unfinished corrective structure. We're looking for a larger corrective structure and more upside at a later stage. directional bias is the same. You continue the range, sure, you can take out this low, you can go to 105, you can go to 96, doesn't matter. You're looking at a larger corrective structure, more upside at a later stage as the general bias. Now, preferably, your wave X retraces at least to the 0.382, which is not yet touched at 113.8K, and it preferably does so after the 382 fib time, being the 8th of September 2025, 6 a.m. Central European time. And you can see that in both cases, this high here was made before the horizontal 382 price-wise and before the fib time-wise. So preferably, your wave X would not yet be finished. Now, mind you, wave X can be any corrective structure. Generally, it's a zigzag family structure, at least commonly it is, but it can be a triangle, can be a flat, right? Triangle structures can be a flat structure, can be more sideways WXYs, can be a more sharp WXY. It can be many things. However, preferably, you do reach at least a 0.382. From a probability perspective, that is generally a minimum target. Now, these fibs are taken from the start to the end of W, and I put the end of W on this low here for a reason. Now, in this particular case, if we put wave W at this low, it means that this is an ABC. So a zigzag, wave A, flat in B, and your wave C is an ending diagonal. Mind you, and it's written in the book Elliott Wave Principle, a diagonal in a wave C is not a common structure. A low percentage, a small percentage of diagonals appears in a wave C. So it's actually quite rare. It's very uncommon as per Elliott Wave Principle. But it is on my chart for this particular scenario. Because if we would need to move wave W to the low here on the left, the higher low, to just have a normal like looking wave C, so to speak, 1, 2, 1, 2, 3, 4, 5, 4, 5, like an impulse in an ABC, we run into a couple of problems. Because after your W, you expect wave X, which has to be a corrective structure. Okay, cool. But then all of this has to be part of a single corrective structure. And because price here took the low, there's only so many options that you have. You're either looking at a flat, A, B, and all of this has to be a wave C to the upside. Now, because of all the overlap, you probably have to consider some diagonals and stuff, but it's incredibly messy. What are the probabilities that all of this is a wave C? And besides, it has to be a diagonal again. It's not great. It's just not really a nice looking structure to end a wave C at this high over here. Now, other option is a triangle where you look for a wave A, wave B, C, D, and then wave E, and then you look for price to move to the downside. However, wave A in this scenario cannot be counted here as a simple zigzag ABC, 5, 3, 5, because you can see here that we basically have move up, sideways up, then we get a correction, up, sideways up. It's a higher probability WXY double zigzag structure. But wave A being complex in a triangle is incredibly rare. If one of the waves is complex, it is by far most commonly wave C, and if not C, wave D, as also written in the book when we go to the theory. Your final option would be a WX and then a wave Y. However, wave W internally is not allowed to have a WXY. Wave W can only be an ABC structure, either a zigzag or a flat. So therefore, the probabilities are very low that that's your end of W. And then if I have to choose between ending wave W here and count all of this as a low probability corrective structure, or end wave W here and then have a diagonal in a wave C, which also isn't great, but it's at least better than having a flat triangle W and end wave W here, right? Then this is what I choose. So this is then the main thing that I am looking for, which is the reason why I put wave W here, which is then also the reason the fibs for X are taken from the all-time high to the low of W. So here, you're just looking for a larger corrective structure, your W, your X, your Y, corrective shenanigans to the upside. This is incredibly messy. I have zero interest to count all of this on a 1 hour, 15-minute time frame. It doesn't benefit me. It's a very low time input versus reward. So generally, right, when you get like these very, very messy structures, and sure on a 50-minute there's trades to be found, but on a 4 hour, 1 hour, yeah, it's very, very messy stuff. The clarity will come, just have to be a little bit more patient. Now, preferably, of course, your wave X not yet finished. Bit more upside would be nice to reach at least a 302, but we'll wait and see. Wave X can be shallow at times. Now, your most bullish scenario is what I have on my chart. I at least wanted to show it because arguably the WXY is your bearish scenario because you continue the range, possibly look for new lows, go to 105 or 96. And in your bullish scenario, of course, that's the invalidation. So you have a finished WXY to the downside and you look for some multi 1-2 or 1-2 shenanigans here on the lower time frame. Again, not counted in detail. Possibly you would look for a 1-2, 1-2 and eventually a 3 up. Right, like, can this be a high probability wave 1? Well, counting a diagonal here, I've had a look also during the weekend at counting this as a high probability diagonal because of all the overlap, but it looks really bad. So it's, I don't know, it's just not something that is really good looking. If you try to count diagonals here, then usually your wave 5 is longer than your wave 3, or your wave 4 is larger than your 2, or your wave 4 hits the lower trend line of a channel, which means it's expanding. Expanding diagonal is rare. It's just a messy structure. So I like to wait for a bit more clarity. And if we're looking for wave X to at least touch the 382 at 113.8, which would be nice, if price would continue to the upside, okay, cool. We can always just extend this structure and look at an impulse to the upside, which from a trading perspective makes it very easy because preferably with X we look for upside. In a bullish scenario, preferably upside, but in the bullish scenario, you're looking for a couple of 4-5s at a later stage, create a bit of a messy range after a clear impulsive structure to the upside, like a bigger move on high volume, creating a gap. So move out of this mess over here, go to the upside and create a new mess. That's basically what we like to see. And then as price is forming wave 4s and 5s here, it becomes interesting to short at areas of resistance and then look for a move back towards the downside. Very, very easy. Now, the invalidation is the low at 107.2K. And if you get this move to the upside here, if you have zero clarity on what's going on, it's of course no problem from a trading point of view to be like, you know what, I'm going to be on the sidelines. I have no interest, right? I don't want to be involved. I'll just wait. And if you get an impulse up, you miss the impulse, you trade the retracement down, observe the retracement. If high probability is corrective, look for another leg up, minimum target, potential continuation to new all-time highs, right? Makes it very interesting, of course. But yeah, WXY impulse at the moment have the same directional bias, preferably see a bit more upside. Now then we have all the levels. So these are the volume levels that I have on my chart, all of them. So you can see there's a lot more going on than the 3 I showed on the daily time frame, but here you got everything, right? Then we have time frame horizontal levels. And then we have the news. So we do have some news this week, Tuesday, Wednesday, Thursday, and also on a Friday. So news heavy week, Thursday arguably, as well as Wednesday. Those are the, I suppose, more interesting days. But nonetheless, all the times you see here, Central European time zone, just trade safe. It can increase the volatility on the chart and you don't want to be on the wrong side. So then we get to the probabilities. So on a weekly time frame, probabilities higher for the bulls, quite simply looking still for another all-time high. Reason being, this move to the downside is a higher probability corrective structure. I don't really necessarily care much about what corrective structure I'm looking for WXYs, right? That's the detail, the nitty-gritty. If you want to keep it very simple, cool, directional bias is still looking for another all-time high. When reaching high time frame areas of support, it's interesting to look for moves towards the upside as the potential for the end of a wave 4 might be there. Now, on the 4-hour time frame here, it would be neat for X to at least touch the 0.382, sitting at 113.8K. If price moves up, eye on alternatively an impulse if it would continue towards the upside. Other than that, the structure to the upside here from 107K is incredibly messy, so it is not worth going over this in detail. I really can't be bothered, CBA, to count this move towards the upside. In general, I know like, okay, wave X preferably moves up a little bit more. If we get an impulse, cool, we move up a bit more. Right, if wave X is not going to reach the 382 and instead move down for Y, okay, cool, still looking for corrective structure, still looking for upside later. Like, it's just like, because I have that directional bias, because of Elliott waves, it makes things very, very easy, and I don't necessarily need to be involved with all the shit that's going on sometimes on lower time frames. So if one likes to keep it very simple, it's basically this. Is the move from all-time high down motive, impulse multi 1-2 diagonal, or corrective? impulse, invalidated, overlap. Diagonal, invalidated, flatten wave 2. Multi-1-2, low probabilities as explained. Okay, cool. So with that in mind, corrective moves down have higher probabilities. You don't even really need to know exactly what structure is forming. That's the nitty-gritty. That is if you want to snipe the low and that sort of stuff. The bias is upside till proven otherwise. And proven otherwise basically means get a multi-1-2, 3 down, multi-4-5. After your 4-5s, get a larger bounce up and look for another leg down. That's your proof. We don't have it on the chart at the moment. Now, even if a larger corrective structure with lower prices, so another low, is forming, as long as an impulse doesn't show like after a multi-1-2, probability is higher for upside, and with good risk management, like it's easy, relatively easy to trade this. So yeah, there you go. Cool. Thank you for watching. Hopefully this video was helpful or valuable to you. On the left, you see a video on the simplest way to use and trade Elliott waves without even counting. And on the right is the Elliott Wave educational playlist to help you understand more about Elliott waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye-bye.